මෙතන පේනවා ඉන්නයි නේ.
browser එක open කරා.
කොහෙද මෙතන?
ඔව් මෙතන browser එක open කරා. එච්චරයි කරන්නේ.
Okay, good evening. So I'll take you all through today is about the auditor's report. Now, as we have discussed so far, ultimately at the end of this exercise of auditing, auditor come up with a report based on his conclusions in the audit carried out. Now, so whenever an audit is offered for auditor, what auditor does is acquire the basic understanding as to the audit. There are a lot of formalities to be done. I believe that you all have already discussed about it, and then, right, say plan the audit well, develop the audit strategy, and then conduct the appropriate audit procedures. And at the end of the each and every audit procedure determined by the auditor, right? So auditor will have to arrive at a conclusion as to whether the particular balance audited by the auditor shows true and fair value or not, right? For example, when a financial statement is given for the audit, auditor will do the risk assessment at the initial stage. The risk assessment is done to identify basically the auditable items or the items that require special attention in the audit, or that require the special attention of the auditor during the course of the audit. Once those are identified, auditor will decide, so what are the basically the audit procedures to be performed. So what would be the competent required, competent staff required to audit the relevant area. So likewise, so auditor will identify the auditable areas and then decide the procedures and then decide the competency of the people required to audit them, and then finally get them to audit those areas. For example, say in a given organization's audit, auditor might have identified trade receivables being an auditable area, or an inventory being an auditable area, or a property, plant and equipment being an auditable area. And there is the auditor will develop the appropriate audit procedures. So auditor will identify the financial statement assertions connected with that, and then identify the auditable, the audit procedures that need to be performed to audit the particular item, referring to the financial statement assertion applicable. And then, so these are right. So what is the competency or the skills, right, or the staff member that need to or who will be located in auditing the particular for example, it's a very complicated area, auditor will consider that okay, more experienced, more competent, right, more qualified person is required in auditing that. So then what will auditor do is identify suitable person working in his organization and then assign him to audit the particular item or the particular area. So this is a generally process followed by the auditor. And do the risk assessment, identify the auditable areas. Once those are identified, develop procedures thereafter, right? So the assign or allocate properly qualified or appropriate person in auditing them. So once the particular person complete auditing the particular item, auditing the particular area, he will arrive at a conclusion. So auditor will arrive at a conclusion as to whether the particular item audited by him shows true and fair view. Whether the particular, for example, if a trade receivable was audited, he will see whether the trade receivable balance shows true and fair view. So if the inventory was audited, the inventory balance shown in the balance sheet shows true and fair view. If the property plant and equipment is audited, he will see whether property plant and equipment shows true and fair view. So this is what auditor got to do. Because at the end of the day, he will have to work conclusion, right? Whether the balances audited by him, right, shows true and fair. So that is the procedures performed by the auditor. Thereafter, what auditor does is, right, he will compile. Auditor will compile an appropriate report giving his opinion overall whether the financial statement audited by him shows true and fair view. So if it shows, so auditor will come up with a report to say that the financial statement audited by me shows true and fair view, or the financial statement audited by me does not show true and fair view. So like a conclusion will be arrived at the end of the day. So therefore, for this particular purpose, right, for this particular purpose, auditor use kind of a specimen, right, the specimen auditor report. Specimen auditor report, right, so this is part of the auditing standard, so which is being used, right, especially expressing an opinion on the financial statement audited by now if you will take the specimen of report, right, so if the financial statements audited by auditor shows true and fair view, right, so at the end of the report, auditor will say that financial statement audited by me shows true and fair view. So because at the end of the each and every verification or the procedure performed by the auditor, he has arrived at a conclusion saying that the particular item shows true and fair view. So therefore, he will say that financial statement shows true and fair view. For that particular purpose, he will be using the specimen given in the auditor's report. So auditing standard, specimen of the auditor report given in the auditing standard. Now we'll first see, or we'll first try to understand, so what are the content of the auditing report, and the later on, so we will go through and see, so what whether what we discuss here are there in the specimen of the auditor report, right, used by an auditor in a listed company, for example, Haley's or the John Kills. Now, auditor report, they start with an addressee, right, because auditor report will have to be addressed to somebody. So, therefore, the first one, right, first one is, the auditor's report, the first component, the first point, right, or the first element of an auditor's report is addressee, right. It goes on to say that, so the independent auditor report to the share, say the limited or the share say 1 limited, is unlimited. So therefore, in the audit review, first you identify the party to whom you address the audit report, addressee. You identify the party to whom you address the audit report. Right? So addressee. Now, so see whether we can take a specimen of auditor's report first. Okay, now here you can see. Here you can see that it goes on to say that independent auditor report to the shareholders of Alice PLC. So therefore, if you will take the auditor report, so what you will see, right? So what you will see right at the beginning is the part whom the audit report was addressed. With the part whom the audit report is addressed. At the end of the day, the auditor is appointed by the shareholders, right? So therefore, so the auditor got to report back to them, right? So they are only addressee. So therefore, auditor will have to identify the party to whom the report will have to be addressed. So we start with that. Haley's auditor's report. So it goes on to say that independent auditor report to the Haley's, to the shareholders of Haley's PLC. So then we'll get into the first paragraph. First paragraph. Now here, the first paragraph, right? So in the first paragraph, is or what auditor does is, or what is included in the first paragraph of the auditor report is, so we auditor identify the components of the financial statement being audited. Auditor identify the component of the financial statement being audited. When set of financial statements being given for the audit, so it includes many components. Now here in the first paragraph, what auditor does is identify what are the components of the financial statement being audited by. For example, in the first paragraph, auditor goes on to say that, so the statement of comprehensive income of this entity of Alice PLC for the year ended 31st March 2016. And what is the financial position? The cash flow statement, statement of changes in equity, right? And then account policies and notes of the financial statement. Now they all, so therefore in the first paragraph, what auditor identify the component of the financial statement being audited. Now we go to this particular statement. right? So it goes on to say that we have audited, right? We have audited a company financial statement, includes a statement of financial statement of Haley's and subsidiaries, which consists of the statement of financial position, the income statement, statement of comprehensive income, statement of comprehensive income, statement of changes in equity, right, and cash flow statement for the ended and some other significant accounting policies and other explanatory information. So therefore remember, so when you take the auditor report, what you first get is the paragraph which includes the being audited by components being audited by. So then we move into see, so what second paragraph. Now second paragraph is about the responsibility of the board of directors pertaining to financial statement. Now here specifically include, right? Auditor will very specifically says that it is the responsibility of the board of directors to present financial statements in compliance with the Sri Lanka accounting standard. Because there are many instances where certain stakeholders are having a wrong perception that the auditors are responsible in preparing and presenting the financial statements in accordance with Sri Lanka accounting standard. No, right? So that responsibility lies with the management. So management got to ensure that they acquire the appropriate resources and so prepare a set of financial statements in compliance with Sri Lanka accounting standard. So therefore, so in this particular paragraph, so auditor very specifically says that okay, management, you are responsible for preparing and presenting the financial statement. In addition, the same paragraph, so auditor goes on to say that it is the duty, right? So it is a duty and responsibility of the board of directors to come up with controls. Now I believe that we discuss about the internal controls. So it goes on to say that board of directors or the management is responsible to introduce appropriate internal controls. Appropriate internal controls prevent and detect fraud and errors. One other perception of the most of the stakeholders is that auditor is responsible to introduce internal controls and prevent and detect frauds and errors. No, auditor is not responsible because auditor is not there full time working within that organization, right? So therefore it is the duty and responsibility of the management to risk involved in individual processes or the individual activities, risk involved in the individual activities or the individual processes, and thereafter come up with appropriate internal controls and then implement them and ensure that the frauds and errors are prevented and so they focus mainly on two things: to highlight stakeholders the fact that it is the duty and responsibility of the management to prepare and present the financial statements in compliance with accounting standards. Second one, so it is the duty and responsibility of the management to come up with an appropriate internal controls to prevent and detect frauds and errors. So we will go on the auditor report given for Haley's PLC for the year ended 31st March 2016. Financial statement of year ended 31st March 2015. You all can see that auditors very specifically said that board of directors is responsible for these financial statements, right? So that gives to and fair view in accordance with Sri Lanka accounting standard. Further it goes on to say that they are responsible for the internal controls board determined necessary to enable preparation of financial statements that are free from material misstatement whether due to fraud and error, right? So that basically what it says is they are responsible for statement in compliance with accounting standards, right? And then introducing appropriate controls, right, necessary to prepare financial statements free from material frauds and errors. So that second paragraph. Now we'll get into third. In the third, so what auditor one responsibility. Second paragraph is what is the responsibility of the management. Where paragraph deals with what are the responsibilities of both, in respect of audit. Here goes on to say that, so it is the duty and responsibility of the auditor. It is the duty and responsibility of the auditor to audit. So in accordance with Sri Lanka. Now whenever management prepares a financial statement, they got to do it based on Sri Lanka accounting standard. Similarly, whenever auditor does audit, or that done in compliance with Sri Lanka. So they are under the auditor responsibility. Audit goes on to say that my responsibility, right, is to express an opinion, right? My opinion, so on this financial statement auditor, and I do this audit based on Sri Lanka, because ultimately one auditor express an opinion on truth and fairness of the financial statement being audited. So if the financial shows true and fair view, so auditor will say that the financial statement audited by me shows true and fair view. So if the financial statement does not show true and fair view, auditor will say financial statement audited by me does not show true and fair view. So then in the third beginning, auditor says, yes, my duty is to express an opinion on a financial statement be not. So that based on Sri Lanka auditing standard. So that is available for auditor in auditing the financial statement. So that goes on to say that, okay, our responsibility is to express an opinion on this financial statement based on our audit. We conduct the audit in accordance with Sri Lanka auditing standards, right? So it specifically says that, okay, I've done this audit in accordance with Sri Lanka auditing standard. First, to say that those standard requirements complied ethical requirement and plan and perform the audit to obtain reasonable assurance about whether the financial statement are free from material statement. So it goes, it is auditing standard requirement, right? So the ethical requirement, auditor to comply with ethical principles, right? So ethical in auditing standards in conduct. Now the next week, right, ethical principles to be followed or to be adhered by the auditor in auditing set of financial statement. Now your auditor says, yes, I've done with auditing standard. First, the ethical principles or the ethical requirements stipulated in the auditing standard to be complied. So, and I plan, right now, so that, just check the evidence. No, I plan, so that do the risk assessment, right? Meaning, so in the, right? So and then yes, then auditor is so like detail plan, right? So the attention in the audit procedures, right? So the who will, so the plan will have to be, and then the audit evidence will have to be in respect of all audit, right? So based on audit procedures performed referring to the financial statement assertions, right? So you can arrive at a conclusion as to what statement shows true and fair view, or you acquire appropriate audit evidence to whether statement shows true and fair view. So therefore, here what auditor says, my responsibility is to express an opinion. That And right, in the conclusion as to whether the financial statement shows true and fair view. So therefore auditor very specifically saying, okay, so what are the duties and responsibilities of the auditor? Previously said what responsibilities of the management. Now says, okay, these are my responsibilities. Now first, right, say the procedures to obtain evidence and disclosure in financial statements. Those procedures selected depend on auditor judgment, including the assessment of the risk, right? So whether due to fraud and error in making the risk assessment, auditor consider internal control relevant to the entity preparation of financial statement and give true and fair view in order to design audit procedures that are appropriate circumstances, right, etc., etc. And and audit include evaluated appropriate accounting policies used and the reasonableness of accounting estimate made by the board, as well as evaluating overall presentation of financial statement. Now here the auditor so the right, so and then the very detailed procedures were performed, or procedures were given and conclusion is not taken balance from here and there to right. So the so person to say that I have arrived at a conclusion, right? So in addition, said made or the judge whether they are reasonable. For example, when are prepared, management will make a lot of estimates, right? For example, impairment of receivables, right? So estimates. So management will use a lot of estimates and judgments in comparison to the financial statement. So auditor goes on to say, yes, I have evaluated them as well. Reasonableness of these estimates used by the not only right. So that okay, so you have to select the appropriate accounting policies from the accounting side, an appropriate policy or framework, and so they some accounting policies to prepare a financial statement. Here auditor goes on to say that here I have evaluated the is being used. So whether the use, right? Responsibilities. So what here, right? Is to express an opinion, right? Second, so based on a standard. Third, he followed. He says, I plan, develop, perform, yes, right? So the so right, and finally arrive at conclusion as to whether shows true and fair view. So there were elements or right in so there so the auditor responsibility paragraph detail that finally so I get into opinion. So we go now based on the what his statement shows true and fair view, right? Whether statement shows true and fair view will be the stated in this. Will be good. In our opinion, the financial statement give a true and fair view of the financial position of the company and of the financial performance and cash flows for the year then ended in accordance with Sri Lanka standards. view, auditor will say financial statement shows true and fair view. The does not show true and fair view, auditor will say that financial statement does not show true and fair view. Financial statement audited by him does not show true and fair view. So therefore, the opinion paragraph, right, where explains the final opinion of him. So report regulatory requirement, right? Now, they got to comply with the provisions of the Companies Act. All limited liability, they got to comply with certain sections of the right, certain section of the company. Whenever they carry on their affairs, or they got to comply with the provisions of the Companies Act. But we will take with the addition to the Companies Act, bank got to comply with certain other legal requirements, right? The insurance company will have to comply with certain other requirements. So likewise, there are certain other requirements, right? So the companies will have to comply with. Now here, what auditor does is, right? So what auditor does is under the other legal and regulatory requirements. So auditor report whether the activities of the particular organization have been carried out. So based on the provisions of the particular legislation, right? So will be reported here by. Now if you will take here, report on other legal requirement as per section 163(2) of the Companies Act number 7 2000 is stated below. The basis of opinion scope or limited scope of the audit as follows. In our opinion, we have obtained all the information that were required. The audit as far as appears from our examination, proper accounting have been kept. Financial statement of the company give true and fair view, right? The financial statement of the company group comply with the requirement of section 151 and 153 of the Companies Act number 7 2007, right? So here, okay, so I have obtained all information required to arrive at a, right, this conclusion, and the organization have been maintaining appropriate accounting record. We have obtained all the information and explanation. They have obtained all the information and explanation to arrive at this audit, right? And appears from my examination, proper accounting records have been kept by the company. Says, okay, this company have been maintaining appropriate accounting record. Second one, it goes on to say that the financial statement that again, the shows true and fair view, right? Finally, it goes on to say that these organizations' activities have been conducted in compliance with the sections 151 and 153 of the Companies Act. So then, a regular requirement. Auditor says yes, by auditor, and explanation required, right? And the financial statement, appropriate accounting records have been maintained, and it shows. And finally, say the activities have been conducted, or the financial statement in compliance with, right, section 153, right, and 151 of the Companies Act number 7 2007. So if an organization need to comply, certain other act, auditor will report here whether the particular organization is in compliance with, whether the particular organization complies with those legislation or those legal requirements. And is, auditor signature, right? Auditor signature, and so, right? And finally, the place from where the auditor signed the report. It says, right? So auditor signature, the date, and the place from where. Right. So there, if you take this is the specimen of standard audit report. So this is the content, what we discussed was basically the content of the auditor's report, right? We discussed content of the auditor's report. We will just sum up, and then we'll මේකට අර ලියන එකක් පොඩ්ඩක් දාලා දෙන්න පුළුවන්. මේක වැඩ කරන්නේ නැද්ද? මේක අන්න ඕකත් පොඩ්ඩක් ඕන වෙයි. ඒක තියෙදි ගන්න බෑද අර?
ඒක තියෙදි ඒක මාරු වෙනවා සර්. මෙතනින්
කොහෙද?
මෙතනට ගිහිල්ලා මෙහෙම සර් තියෙන්නේ කොහොමද තියෙන්නේ? ඩෙස්ක්ටොප් එකේ ෂෙයා වෙලා තියෙන්නේ.
දැන් වල ඩෙස්ක්ටොප් එක උනේ අරක දාන්නකෝ. මේක යූස් කරනවා නේද?
ඔව් මේක ඕකෙන් පුළුවන් නැත්නම්
මේක අර මම තියෙනවානේ. ඉරේස් කරනකොට අපි ගත්තේ නෑ. ඒතර කොහොමද වෙන්නේ?
ඇඟිල්ලෙන් ලියන එක ලේසි සර්.
ලේසි නේ. right. ඔක තියන්න. So now in this circumstance, in this particular situation, now total profit of the profit shown in the P&L is 200 million. Receivable, which is not collectible, is 50 million. So it amounts to a 25% of the total profit. So as I earlier said, you all have discussed the concept of materiality. So audit has evaluated it and identified the fact that, so this is significant or this is material to the financial statement. If it is significant or the material to the financial statement, right, auditor will have to modify the auditor's opinion. Auditor will have to modify the auditor's report, or auditor will have to modify the audit opinion, right. It's called modified audit opinion. Now here, now there are like property, plant and equipment, inventories, right, cash at bank, payable, loans, capital, and sales, purchases, and all other numbers are fine. Auditor, all other items audited by the auditor, auditor has concluded that okay, so they show, and those balances show true and fair value. There is nothing wrong with them. They are, so those balances show true and fair value. So therefore, now the only problem is with the receivable. Receivable balance does not show true and fair value. Receivable balance does not show true and fair value. In that kind of a situation, auditor will have to modify his audit opinion. Prior to the opinion paragraph, now we have the opinion paragraph here. You have the opinion paragraph here. Prior to the opinion paragraph here, auditor will have to say that, so the receivable shown in the financial statement amounting to 50 million, right, or the recovery of receivable shown in the financial statement amounting to 50 million is done. Or I was unable to, in the absence of appropriate audit evidence, I was unable to determine the recoverability of the receivables amounting to 50 million. Or auditor says, if the audit is relevant, customer is bankrupt, no way this organization so auditor will say that trade receivable shown in the financial statement amounting to 50 million is not recoverable. So auditor will say here, right? So the recoverability of receivables, auditor will say recoverability of receivables, recoverability of receivables amounting to amounting to rupees 50 million is doubtful. Auditor make a note in the right. Auditor will make a note like auditor will make a note before the opinion. Trade receivables amounting to 50 million is doubtful, or the trade receivables amounting to 50 million rupees is not recovered. Word it appropriately. You can word it, right? The trade receivables amounting to 50 million is doubtful. So, like auditor report itself, and then so in the opinion paragraph, auditor will say, in my opinion. So, in our opinion, except for the auditor says, okay, except for this point, except for the recoverability of receivables amounting to 50 million, in our opinion, except for the above statement shows true and fair. In my except for statement shows true and fair view. Now, auditor started the right in mind. Attention in the right and develop the procedures and then arrive at conclusion. Well, so he so true and fair view. But trade receivable balance appearing in a financial statement does not show true and fair view. So based on the information made available for the auditor, 50 million of receivable is not recoverable. So there, if it is not, alright. So losses will in the P&L. Now the statement shows a profit of 2. Now this is 50 million. 50 million, 100 million is about 25. Then material. You will have discussed the material. If it is material, yes. Now this need to be specified in auditor report. So there, it will be recorded in the auditor report. Recorded where he says that the recoverability of receivables amounting to 50 million is doubtful, or trade receivables amounting to 50 million is not recoverable. Will be recorded in the report itself, right? And then in the opinion paragraph, auditor will state, in my opinion, except for the above, right, financial statement shows true and fair view, called qualified auditor. But remember, the auditor will modify the report only if it is material. So if it is not, for example, total profit shown in the P&L is 200 million. Total asset shown in the balance sheet is 1 billion. Now if there is a debt shown in the P&L, balance sheet. So if there amounting to 50,000 rupees, 50,000. So when identifies that 50,000 receivable is not recovered, right? Customer is bankrupt. So that is okay. Now the management has not made an impairment allowance for this receivable of 50,000. But management has not made a provision. Right? That asset is overstated and profit. Okay, they should have looking at the profit. Should have asset. which is not done, right? So therefore, stated, asset overstated. What auditor got to see whether it is material to the financial statement. Now, 200 million. Two, one, 200 million. Or is it significant for a financial statement? Right? Is it significant for a financial statement? So therefore, auditor got to and see. Auditor got to consider and see when the about not obtain appropriate audit evidence is significant or a material. So material, right? Auditor will express and qualified audit opinion. Auditor will say that, in my opinion, right, except statements, financial statements, financial statement shows true and fair view. Shows true and fair view. True and fair view. Financial statement shows true and fair view. Is that right? Now, because what is an adverse opinion? It's a qualified opinion, right? And the disclaimer of audit opinion. Adverse audit opinion refers to, right? So it says that financial statements do not show true and fair. See, statements are materially misstated, right? Materially misstated, right? Does not show true and fair or express or now will be expressed by the auditor when auditor is aware that so the financial statements are materially misstated, right? And that is material and purpose. So financial statement, right? Then auditor will take this, okay, we will extend this example. What I said was, so if the misstatement is material and pervasive, right? So meaning without statement, your balance sheet, your financial statement is nothing. Your financial statement is insignificant, right? You will conclude that is a material and pervasive, going beyond the materiality. Now we take the same scenario. So the P&L shows a profit of 200 million, right? P&L prepared shows a profit of 200 million. To 1 billion. Now when auditor was auditing this, now within this 1 billion, auditor identified that 400 million represent inventories. Now 100 million refers to the or plus. Now if auditor say if say inventory 400 million, there is no audit evidence, right? Now audit evidence available, right? The 400 million shown in the financial statement is not correct. It should be much less. Assume that they have shown the cost. Inventories are shown in the financial statement cost, right? So the inventories will have to be valued at cost, right? But now is significantly low. So, because this particular product is technically dealing with the kind of a technical, right? So technology involved in a product is now outdated. Years they have incurred a cost of 400 million rupees in acquiring or producing it is a different story. But technologies are even though 100 million rupees in acquiring them. So that will have to be shown in your balance sheet. Right? But now the view that okay, you got to make a provision. You got inventory. So impairment the reduction in value of the inventory. But management has not made a provision. They disagree to make a provision. Now, is overstated. When your inventory is overstated, right? You have overstated your profit. Inventory in your balance sheet, inventory is overstated by 395 million. In your P&L, your profit is overstated. Now, at the moment, profit is only 200 million. Now, when your inventory is adjusted, it will be converted into a loss of, say, another, right? Because when your closing inventory reduces, cost of sales goes up. When the so there, now what are now inventory is overstated, right? Inventory is overstated and your the now as I said here, right? Now as I said here, now profit of the company, profit of the company is 200 million. Asset, total asset is 1000 million. Now is overstated by 195 million. Then this will have to be reduced by 395 million, right? And this also will have to be reduced by 395 million, because when your inventory is overstated, it should be in a phase. So the inventory overstated in your P&L will result in sale being when you bring in the right cost of the closing inventory, so which is fine, your cost of sales goes up. When your cost right from your asset, this one goes down. Then I said that okay, you have property, plant and equipment of 500 million. Now this is the asset, this is the plant, this is the plant, this is the plant to produce this product. I said that your product now technology involved in your product is outdated. Say that this product because now technology is available in the market. Customers buy there is no demand, right? So there now this is a you have of producing a product, even though in the product, right? The demand significantly reduced, right? That manufactured by using this particular plant. You have, but by using this particular plant, no one plant, right? So they take it out. And in the end, you have to pay for impair. This is an impairment indication. As it is, right? So it is capable in the product. That particular product has no demand because technologies are this particular plant to produce any other. If that is the case, that indication based on Sri Lanka accounting standard and impairment, right? So they have to test it for impairment. Then when auditor does the impairment testing, the fact that actually this particular asset recovered 50 million. If that is the case, impairment 4 million need to be provided. Impairment of 450 million need to be provided. Right? Now, the management are not done. Now we'll have to do that. We'll have to do. So when auditor realize, if it, so if the profit goes down by 450 million because carrying value, this is a recovery, this is a impairment loss. Right? So meaning, this 450 million should be charged to the P&L. Right? So, but management are not. So if these two, those are the audit findings. Audit fees were overstated by 450 million was not recognized. Right? Now, the company's total profit is 200 million. Asset is 100 million. Now if these two, now see the profit of the particular organization would be converted into a loss. You have to deduct 755 minus 2, then so it will be 645 million. Right? So will be reduced to at the moment 7,000 million. Now 845, right? Meaning 255. Now there are two other. So then auditor realized that okay, now their profit would be converted into a due to this misstatement. There were two misstatements. There is misstatement 1, misstatement 2. Due to these two misstatements, so the profit at the moment profit of 245 million. Actually, it should have been shown as a 200 million. It should have 55 1,000 million of an asset. There were these two items, right? Conclude that is material beyond the materiality, meaning without is like nothing. Your balance is very insignificant without those two balances. In your balance, without two items, the balance sheet is very insignificant. So, take those two, it's a 250 million. When you add up 145 million loss. So that's materiality. If it is material and pervasive meaning if it is very significant, going beyond the materiality, right? Or misstatements are material and pervasive. These two misstatements are material and pervasive in this type of a situation. This kind of a situation, auditor will express an adverse audit opinion. Or adverse opinion where statements of this entity do not 50 million loss. 55 million worth of an asset. So that was significant. So then what auditor will do is what do is right. What auditor will do is So prior to the opinion paragraph, so auditor will say inventories are stated. Inventories of the company. Inventories are overstated. Inventories are overstated. Inventories are overstated by rupees 395 million. 395 million. Second, so auditor will say, so impairment loss, impairment loss, impairment loss of impairment loss of rupees 450 million, rupees impairment loss of rupees 450 million. 450 million is not recognized in the financial statement. Is not recognized in the financial statement. So there was one. So the inventories are overstated by because but the market value is 5. The inventories are auditor will elaborate. Now මට ඔයාට අපරාධ එහෙන ගෙන්න දෙනවා මට කිව්වනම් පොඩ්ඩක් මේක කොහොමද මට නෑ කවුරු හරි මට මේකේ කවුරු හරි ලිව්වනම් මට පුළුවන් හොයාගන්න මේක මේ ද ස්ටුඩන්ට් කෙනෙක්ට වරක් කිව්වේ කවුරු හරි ඉන්නවද ස්ටුඩන්ට් ඈ කවුද ජයසූරිය කියන්නේ ස්ටුඩන්ට් කෙනෙක්ද ඔයා රයිට් ඔයාගේ සරි ඒතර මුදිට
සර් ලිව්වොත් ඉතින් බලාගන්න පුළුවන් නේ මැසේජ් එක
ඔව් මෙතන ලිව්වනම් මේක ඇහෙන්නේ නැහැ කියලා මට ඒතර මම බලලා ඒතර මම මොකද කරන්න ඕනේ ඒතර
මේකේ රිසියුම් කරන්න තියෙන්නේ සර්
කොතනද රිසියුම් කරන්නේ
ඔව් අර ඉස්සෙල්ලා මෙතනින් එනවා මේ මොකක් හරි
මම ඒක දැන් මම ඒක බලන්නේ නැහැ නේ මම මේක බලලා මේක කරගත්තේ හරි හරි දැන් ඕල්මෝස්ට් ඉවරයි අපිට තව පොඩි වෙලාවක් යන්නේ වට නම් හිටියනම් හරි මට තව පොඩි වෙලාවක් නෑ ඈ හරි මම කරගන්න දෙන්න
දැන් සර් මේ මම තමයි එඩිටර් So,
hari mama off कर लेना
इतनी नहीं मैं मतलब
कौन है
एक क्लिक कर लेना
right हाँ right नहीं break एक आध दूरने आते हैं क्या कालिंग में करना है it's okay so what happens is now here auditor cannot conclude whether the financial statement shows true and fair view or not. Auditor cannot conclude whether the financial statement shows true and fair view or not. Therefore, auditor here says under the audit opinion, right? Under the audit opinion, auditor says I cannot express an opinion, right? Auditor says due to the above reason, due to the significance of above reasons I cannot express an opinion. I cannot express an opinion. I cannot express an opinion on the financial statements. So auditor going to say that due to the significance of the items, auditor say due to the significance of the items, I cannot express an opinion on these financial statements. This is called disclaimer of an opinion. This is called disclaimer of an audit opinion. Disclaimer of audit opinion. The auditor says that okay, so I cannot express an opinion on these financial statements. I cannot express an opinion on these financial statements because I never know. For me to arrive at a conclusion, I was not given the required audit evidence. Is the required decide whether it shows true and fair view or not, right? So therefore, remember, right? In a qualified, this type of is called disclaimer of audit opinion, right? Auditor, I mean this called limitation of scope, right? The limitation of scope, auditor scope is limited, right? So auditor scope is limited, as a result auditor give a disclaimer of audit opinion. Auditor says I cannot express an opinion because auditor never know whether it shows true and fair view or not. For him to decide, audit evidence was not given, right? So therefore, now in this kind of a situation, right, we call it a limitation of scope. Evidence was not given for the auditor to take a call. Right? Maybe the management has refused to give the audit evidence. Maybe audit evidence might not have been available due to various reasons. For example, organization, assume in a given year, organizations, the important document like invoices, right, GRL, bin card, and vouchers and all that might have been destroyed due to fire. Might have been destroyed due to a say flood. Right? Right? So when auditor asks evidence to audit revenue, and say the cost of sales or the purchases, management say okay, unfortunately no audit evidence, they were destroyed. There was limitation might have been say the imposed by the circumstances, not by management can't do anything. So those have been destroyed. Or the management might say okay, no, we are not giving you this evidence. Either the management or the circumstances might impose, right, a limitation to the management. They impose a limitation to the management or the circumstances might impose a limitation to the not given the required evidence, then auditor cannot conclude whether the financial statement shows true and fair view or not. Right? So that if it is very significant, auditor will express an opinion to say that significance of the above matters, I cannot express an opinion on this financial statement. Right? If material and significant, auditor will say, I cannot express an opinion on this financial statement. If it is material only, auditor will express an auditor will say that the financial statement, auditor will say, okay, in the absence of evidence of the information, I could not verify inventories amounting to 50 million. Right? If it is only inventories, if it is only, if it is say 50 million rupees of inventory, it is significant, but not, right? So it is 50 million here. 50 million out of 200 million is yes, material, but not pervasive. So here 50, not pervasive, it's material. If it is material, auditor will qualify the opinion. Evidence, I could not verify the inventories amounting to 50 million. Then another say that, okay, in my opinion, except for the financial statement shows true and fair view. In the limitation scope also, if it is material, you go for you modify the opinion, qualify the opinion. If see, what you got to do is, you go for a disclaimer of opinion, right, where you say that, okay, so I cannot express an opinion. Right. So the misstatement, material misstatement, you know that it is materially misstated. Even you know that financial statements are misstated. Right? If it is significant only, so in the sense, if it is material only, financial statements are misstated, it is material only. If it is material only, what you got to do is you go for a qualified audit opinion. Like we discussed here, you say that is a receivable amounting to 50 million is not recoverable. Right? Receivable 50 million not recoverable. Right? Then here under the opinion paragraph, you say that the financial statements, right, in my opinion, so except for the above, financial statement shows true and fair view. But the misstatements are material and pervasive. They are material and pervasive, right? Auditor goes on to say that, so these financial statements do not show true and fair view. So likewise, now whenever an audit is conducted, auditor will have to ultimately come up with a report, right? So if it is, we discuss the content of a standard audit report, and then we discuss, the types of audit opinion, clean up. Yeah, the financial statement shows true and fair view. Then qualified audit opinion, whether it be misappropriation, right, or sorry, mistake, right, or the limitation of scope, only material. Then auditor says, okay, financial statement, fair stated, other you state, whatever the balance which is not presented fairly in the financial statement, you say other than that, financial statement shows true and fair view. So if you know due to mistake, which is material and pervasive, it has a misstatement which is material and pervasive, auditor will say that financial statements, right, do not show true and fair view. So if there is a limitation of scope, it is material and pervasive, right? So auditor will say that, right? So he cannot express an opinion on the financial statement. So therefore, basically, this is what it is, right? So auditor's report and the content and the different types of audit opinions auditor can express. So we will discuss, with some more examples, further, right, the next week. Thank you.